Hi, this is your host Swapnil Bhatia. We are here in TFI Newsroom, and today we have with us two executives from Clear Ventures. So, first of all, can you please introduce yourselves?
I'm Rajiv Madhavan. I'm one of the co-founders with Chris Rust of Clear Ventures. We formed Clear Ventures in 2015, actually closed the first round in 2016 July, which was 121 million venture fund, and have subsequently gone and raised another 180 million ventures fund called Clear Fund 2, which has just been closed, and the announcement is just going off today.
And this is Chris Rust, also co-founder and managing partner of Clear Ventures. Rajiv and I have been friends and colleagues since the late 90s. We first co-invested together in a fascinating company called DXTEL, which is one of the pioneers of voice on the internet. And we've been working hard. We're having a lot of fun supporting enterprise IT entrepreneurs.
So you did talk about a brief history of the company, but what was the primary reason where you started? What was you seeing that was happening in the industry, especially when we look at Industry 4.0 or the fourth industrial revolution, where you see, okay, this is where we will be needing to help these startups and companies. So what did you see back in those days where you felt the need of starting this?
So, Swapnil, I and Chris have been lucky to be in the bowels of Silicon Valley's startups since a fairly long time. Chris has been here in the Valley since '98. I came in '91 and did my first startup in '92, which is a company called Logic Vision, Ambit, and Magma. So I ran, a company called Magma, which was a public company that I took public in 2001 for 12 years. During all of that space from '98 on, when I had a first exit, I really wanted to first give back to the community. I mean, during '91, '93, etc., it was interesting not to have that much advisors for startups. In by '98, clearly, Silicon Valley has had a lot of successes, and I did about 20 plus 28 angel investments between 98 and 2012. And in 2012, when I was exiting, it was a great opportunity because what we were finding was a new trend. The trend of in 2012, 2015, that was the period that cloud was coming into play. Mobile computing was coming into play, and SaaS was beginning to hit peak strides. So anything that can be, delivered on the cloud, developed on the cloud, delivered on the mobile as a SaaS service was becoming a very big part and parcel of every startup's arena, as well as the AI revolution started coming in. If you combine those four, and those four were coming into play individually as four trusts, and we found an opportunity to invest in companies in those four arenas. So if you look at our Clear Fund 1, of the 14 companies we have, pretty much everything is in that space. But when you sit back and you look at technology, every time you have a revolution of certain point pieces like AI, like cloud delivery, cloud development, mobile delivery, and SaaS, the next generation will sit on top of that and will build on top of that to have things like industrial, expertise, Industry 4.0, where you are using all of these elements that have been created in the previous space of startups to create the next wave of startups that's about to hit. So we see it as a tremendous opportunity to be able to create the next wave of startups, and within that, the scope of things, we loved being in Silicon Valley. It's the geeks paradise, and clearly enjoying doing that startups in that space.
Right, and so much is happening, on top of cloud containers and everything. We are talking machine learning, IoT is there, biotech is there, VR is happening, blockchain is happening. And of course, Elon Musk is doing a lot of things with his space, and then boring companies there. So we don't know what new models will come up. So what are the trends that you are excited about when you look at Industry 4.0 or the fourth industrial revolution? Doesn't matter how we look at it. So what are the things that as you said, you have come a long way from seeing all those new technologies evolving, then maturing, where we are now today.
Swapnil, again, we were the first investors. For example, you mentioned containers, right? And I'm going to repeat this, right? This is almost like a repetition of what happened in Fund One. There was a company called Robin Systems, which we were the first investors in. 4 years ago, containers were new. And this was a company which were redefining containers for stateful applications. Containers are in hit full stride, and we invested in something which is containers for stateful. And today, the talk of the town is how do we bring stateful applications into container applications. Same thing is about a hit with Fund 2. And again, our challenge and our opportunity is to invest in things which are 3 years out, 2 years out, etc. Right? So, for example, in Industry 4.0, the very aspects, for example, I'll just take industrial IoT as an example, right? The ability to collect information from sensors. We had done in the last round a company called Atmosic, which does not need batteries in the sensors, right? And we think that will be used pervasively in this fund by companies to build sensors which can be deployed anywhere and not have to replace batteries. If you're having industrial IoTs and the total IoT count is going from 2 billion to 20 billion or 50 billion, you can't afford to go and change batteries. Now, let's assume that infrastructure is already being used. What can you do? Well, then every machine, is going to have so many sensors. The ability to interpret from machine learning what is going wrong with the machine, when to send a serviceman, all that will completely get automated as more and more of the sensors make adoption into all these machines. So we think of that, and industrial IoT is a good example of Industry 4.0. The amount of data you can collect from different sources, when put together with the intelligence of what is already there in terms of machines and all aspects of things, will give you a tremendous opportunity in putting it together. So our challenge is to find those which are not yet in vogue, but will be vogue in 3 years to 4 years.
But that also, that you're making a bet on what will work versus what will not work. So that, of course, that also it means that you bring in your experience, whatever. So when you choose to invest, if I'm wrong, how do you really decide? Okay, this is what we should be betting on, either the company or the technology or the trend.
Chris, you want to take that?
Sure. Good morning, Swapnil. Really, the pillars of any investment thesis by a venture capital investor is the market opportunity, the team as a tangible asset, and the product or service that they intend to bring to market. And if you look at what defines a good market opportunity for a venture capital investment, what we're seeking is very early nascent markets that don't exist yet, that have hypergrowth potential and are likely to see outsized investment by the target customers. That outsized investment doesn't happen unless you're solving a very important pressing business problem. We like companies that are taking a good idea and marrying it with great execution. Many years ago, one of my mentors, Don Valentine at Sequoia Capital, told me that the difference between execution and vision is dilution. So dilution's a common enemy. We hate dilution. We like to see the entrepreneurs we work with do very well financially. It's a key driver, key measure. So hyper-growth potential markets, product-oriented teams, and ideally, we like to see teams that have an innovator, a validator, and an implementer. Innovator is typically like a chief architect, chief scientist, primary product author. Validators like VP product, that could be a voice for the company with the target customer. And then the implementers like the VP of engineering who can marshal an implementation team. The best venture-backed companies, they typically put all their energies into building great product and selling it. And these are the kind of the hallmarks of the things that we personally gravitate towards. But every situation is different and unique. So you got to keep an open mind and always ask what can go right.
Right. What I've noticed is today, almost all the new companies that are coming up, they're using a lot of open source technologies, and sometimes there's a lot of misconception within the industry. I mean, not the industry, but sometimes within our journalist circle that when you take outside money from venture capitalists, they might influence how you uh, treat your open source project. So, what are your thoughts about it? Because you guys have seen whether you mentioned cloud or containers, or Robin is doing a lot of work in open source. So, how do you look at open source? Does it look like a threat, or you look at it as an opportunity because the whole community is building things, so the cost of R&D development goes down? So, can you just share your perspective on that?
So, Swapnil, I think, open source has been an interesting revolution. While there are some companies which have succeeded in open source, and again, success is a very, binary decision, because if you've raised more money than what you've made to create the company, is that a success? That's a question that needs to be asked, right? I mean, we are a fundamental believer in that better licensing models like MuleSoft, etc., exist, where you have users who can use it. It's like a premium flash. You download a few free amount of copies. So open source for the sake of just license change is not necessary. Open source to get a community and to get help from the community makes a lot of sense. You mentioned Robin as an example, right? Robin enables containers to be applied for stateful workloads. More importantly, they bring in lifecycle management. So, for example, of like GitHub kind of experience for application users without the applications having to change on any cloud or on-prem. So, yes, they enable all of these open sources like Kubernetes, etc., to be deployed en masse. Again, that is very similar to companies like Nutanix. For example, Nutanix, what did it do? Nutanix is not an open source company, but certainly leveraged, hypervisors-based solutions to create a solution for VDI. In fact, what did they do? They created a hyper-converged infrastructure for VDI, and they came in and said, "Hey, what VMware was doing and Citrix was not doing is not sufficient. We give more reliability, we give more stability to the system." Robin is doing something very, very similar in terms of what it's doing. It's a hyper-converged infrastructure for Kubernetes, where you can bring in Kubernetes, storage, compute, and the application knowledge to build it all together to get reliability and lifecycle management for applications, right? So we are firm believers in companies that enable key technology strides. Open source is going through some of the redefinitions. For example, almost all the open stack startups that have been formed, it's very, very difficult in the last 2-3 years to see some of those exits and successes happening, right? I mean, it's been a very slow adoption. One of the things that happens is, can you have a community and they yet lose so much control of the development and future of your product in such a way? So, for example, OpenStack, everything got shown into OpenStack. It became the mother of all stacks more than anything else. And what ended up happening, lots of companies lost their mojo and their differentiation. Like everybody had their own customized version of OpenStack. So how do you prevent that from happening? And this is a very interesting question that you've asked, because for a VC, it's a very tough thing to make money off. And we have chosen companies which are in the fringe of things, which actually enable these open sources to come in, but it's very, very difficult for open source databases to make money. There are now exceptions in that space. I'm not going to say no to that. Mm-hmm. But for example, in the last 1 or 2 years, there have been people like MongoDB, but for every one exception, there is 10 or 20 open source projects which are completely lost in terms of what could be done, right? And the second problem that ends up happening is, if you actually get this open source done, in the second year, some of these cloud providers download this and create their own offering. So those who actually enabled you to form a delivery mechanism now becomes your enemy. So for venture capitalists, this is a very tough to tread on water. We are very, very careful on how we do the open source as a product line. But anything that enables a lot of open source to succeed is certainly going to be one of the areas that we are looking to invest towards, right?
Right, I think because open source is a development model, how you can build a business around it, that is a totally different question altogether,
Yeah.
and that is where the whole whether it's MongoDB or whichever company Redis Lab, they're struggling because it's not about the development, it's all about how you make money around it. Coming back to the venture capitalism, do you have different tiers or different programs or different plans to help companies, or just like one set? Can you talk about that?
So we actually have a number of very specific initiatives here at Clear Ventures to help startup teams reach their full potential. In fact, the firm has been purpose-built for this, and it's really been Rajiv and my personal career missions for all of our adult lives here in Silicon Valley. The things that startups need is they need access to capital on fair terms. They need access to customers. They need access to talent to build a great product and sell it. Then they need access to follow-on financing, right? And obviously experience at scale and being able to provide them with some guidance and mentoring is also important. We've been fortunate over the years to work with many fine companies. We've had around 40 exits as venture investors, about 55 billion in market cap created from those realized exits to date. And so the suite of programs that we built here at Clear Ventures ranges from office hours with no strings attached, just brainstorming sessions where startups come and they're not pitching their idea seeking funding. It's more of a collaborative, let's spend time together in front of the whiteboard and make sure that the business, which is very different from building the business, is very different from building a product. That the business and the go-to-market strategy and the demand generation and the sales acceleration and the hiring pipeline and the staffing strategy and all that kind of is coherent and makes sense. We have incubation, and actually our office in Palo Alto seats around 25 people. We use it as a co-creation studio. We've had a number of companies that went from the very earliest points of idea creation through incubation, through seed, and into the Series A start here. A couple to keep an eye on, Arcus is one worth mentioning. They are reinventing the networking industry as we know it by providing an extremely flexible consumption model for networking around a very progressive network operating system. A very fine team of distinguished engineers out of Cisco and other leading companies in the networking field. In addition to mentoring, office hours, incubation, we have in Clear Ventures 2, the $380 million fund that we're just announcing. Very fortunate to have been able to grow assets under management to 300 million now. We've carved out 15 to 20 million specifically for $50,000 to $500,000 investments. When high potential teams just need some time and space and runway to take the bet on themselves, and they haven't sorted out all the details yet to earn that large institutional, Series A financing. Rajiv and I really enjoy this part of the company building process. It's one of our most favorite things to do, but we try and balance that out with an eye towards the entire life cycle that lies ahead. We've been fortunate to work with a number of good companies that have reached quite consequential scale Rajiv ran a public company for 10 years, got it up into triple-digit millions of revenue, and basically dominated the mobile processor industry. And then companies like GoPro, where I was an early investor, got up to 150 million a month during my tenure from the point of origin. So, and our efforts to help founders win are supported by a very fine and experienced and committed team here. We're joined by our marketing partner, Glenn Gao, who's really a demand generation expert, and he really deeply understands marketing best practices. We have a very fine back office team with finance professionals to help with everything from financial modeling to setting up house, and then we also have built a very nice captive IT stack here that helps us to get to the right person on customer introductions and for talent quite quickly, and that's continuing to evolve, and you'll see more innovations there.
Right. How much do you get involved with day-to-day activities of these companies, or you let them do whatever they want to do?
I think it's important for all venture investors to recognize that you're an invited guest to somebody else's life journey. Good entrepreneurs have options, and it's incumbent upon you to earn the right for the first call. And you do that by being helpful, but not being invasive, right? That's a fine balance. The way that we try and add value and be measurably helpful. It's really important, I think, to be measurably helpful. It's one thing that we strive to do, and we actually track our own performance in terms of keeping track of the number of customer introductions and the outcomes from those introductions, the number of placements and the number of rounds we help to close, and so forth. Rajiv and I have been involved with closing around 480 rounds of financing,
right,
years, and we kind of have a good sense of how that process works. So, again, if you can be helpful in providing access to customers, access to talent, and access to follow-on financing, those are things that are always welcome because they help to accelerate the momentum of the business, and ultimately they help to drive shareholder value creation by delighting customers. So everything we do is really aligned around those three pillars, and it's working. I think we're making good progress.
And for how long you would continue to fund the company, or do you want them to stand on their own feet and either go public, or you want to keep? So what does your look like? Okay, this is the time till we'll support them. After that, they should be like you're 18, leave my house.
Well, with 300 million of assets under management, with two managing partners, our capital under management per partner is comparable to all funds, except for perhaps a very small handful of large capital aggregators. And these resources give us the financial capacity to be full lifecycle partners for these companies. And so our initial investments are typically 500,000 to 3 million, but we typically plan on 6 to 8 million per company over the life of the journey.
That 6 to 8 is an average, meaning there could be companies where we could go beyond that in terms of what we do.
Perfect.
You have to, it's the companies have to make the progress to, I guess, earn our financial support over 3 to 5 rounds of financing. But to date, every investment that we've made in Fund 1, we have been fortunate to see them secure an independently priced follow-on financing round. We've participated in all the financing rounds to date, and 14 companies. They've done 28 rounds. We've invested around 60 million of Fund 1 so far, and those companies have raised around 440 million of total funding. So matriculation's been good. Doesn't mean that the companies will be successful, but it means that they're making sufficient progress to earn the right for follow-on financing from sophisticated professional institutional investors. And probably more importantly, it means that they have the resources to swing for the farther fence and reach for their full potential. So we're thankful for the progress that the fine entrepreneurs in Fund One have been able to achieve.
Right. I think we got everything that I was looking for. Is there anything else you would like to touch upon, or we should wrap it up now?
A couple quick comments about Industry 4.0 and the intelligent enterprise, if you don't mind. I know that's a central theme for your...
No, I was about to ask, but I would like, maybe we could skip that part, So, yeah, please go ahead.
So, Rajiv touched on some things related to Industry 4.0, but I think we're in a very fascinating time where Industry 4.0 is really driving the movement towards an intelligent enterprise as we've never seen before. By that I mean an enterprise which is instrumented, driven by big data and analytics, highly efficient with a lot of automation, leveraging cyber physical devices, and deeply immersive. And if you look at the end-to-end workflow for a modern company today, every stage of that company's workflow is going through a significant reinvention cycle. Product design, prototyping, build, manufacturing, marketing, sales, operations, management, and monitoring of the product over time, and then customer service. Every element of the food chain is leveraging cloud, mobile data, analytics, ubiquitous broadband connectivity, and machine learning to find ways to automate and streamline their operations. Right? So it's really a fundamental shift in what it means to conduct commerce. And we're seeing next generation of entrepreneurs using this rich new toolkit created by core cloud, edge cloud, highly distributed cloud, open source technologies, deep machine learning, internet scale data aggregation from the world being instrumented in new and novel ways through IoT, robotics. It's just a tremendous opportunity. I don't think any large companies and large industry verticals are safe, frankly, from the trends of disruption by disrupting not only their end product, but how products get designed, how they're managed in the field, how they get built, how the logistics are managed to sell them. So we see a lot of opportunity, and I think the timing is terrific for Clear too.
Yeah, as I said, I go to events. Last year I went to 29 events, tech events, and there's so much happening. Things are moving so fast. But at the same time, there are a lot of consolidation also happening where companies are getting acquired. So yeah, it's an exciting time we are living in. So it's and also VCs play a critical role in enabling those entrepreneurs to come up with their ideas and actually productize that or commercialize that. Otherwise, idea is just an idea.
The last thing that I'd like to mention, so with 300 million of assets under management, we are clearly open for business. We're looking for the next big idea. And our limited partner base here at Clear Ventures is one of the, key strategic advantages we feel very fortunate about. Our investors are large corporate pensions, educational endowments, charitable foundations, children's hospitals, and family offices of iconic technology industry executives. There's around 175 billion in assets under management of our limited partner base. And this LP base has been kind of carefully curated over time to give us an opportunity to do well, but also while doing good, given the noble causes that they represent. And our LPs have significant dry powder and financial capacity for direct investments. I mentioned that we'd invested around 60 million in Fund One into 14 companies to date. And these companies had raised around 430 million of total funding. Around a quarter of that came from our LPs, and think that's a good benchmark of being measurably helpful to our portfolios and really delivering on the promise of access to customers, access to talent, and access to follow-on funding. And so, again, with the close of Clear 2, 300 million of assets under management, we're only as good as our next great investment. And, we'd be delighted to hear from ambitious next-gen entrepreneurs that want to make Industry 4.0 and the intelligent enterprise real.
Right. Awesome. Thank you so much, Chris and Rajiv, for talking to me today. And I'm looking forward to talking to you again with maybe Industry 5.0.
That's our life, right?
Thank you.